Now, let us look at the difference between trading stock surplus and the trading stock deficit. So whenever you are talking about trading stock surplus or trading stock deficit, automatically we are referring to a perpetual inventory systems or a continuous inventory systems, simply because you are referring to two balances relating to your trading stock or relating to your inventory. But with periodic inventory systems, you always have one account, which is balance as per the physical stock count. That is the difference between the two. With periodic inventory systems, you always have one balance as per your physical stock count. With your perpetual or continuous inventory systems, you always have two balances, which is trading stock as per your trial balance and your balance as per your physical stock count. So how do you determine whether it's a trading stock surplus or trading stock deficit? Now, if you're talking about a trading stock surplus, you're talking about an income. How? Okay, let me explain this. Balance as per physical stock count must be higher than the balance as per the trial balance. So, again, we will take the balance from your trial balance, your balance or your inventory balance as from your trial balance. Then compare it with the balance as per your physical stock count, which is found in your adjustment. If we determine that the balance as per trial balance, meaning that the balance as per our calculations from the beginning of the year until the end of that financial year, without going to the warehouse to physically count the stock. So it's balance based on calculation, it's balance based on estimates, where we say we know we have 5,000. So it's a balance based on assumptions, where we say we know we have 5,000, we have the inventory of 5,000 rand. Therefore, if we buy, we're going to say plus 5,000 rand, not knowing or not checking whether stock that we say is 5,000 rand, maybe some of that particular stock have been stolen or has been damaged. But all those changes will only be determined by a physical stock count, where we now say no, these particular goods were stolen. They are missing goods that cannot be accounted for. So in that case, those goods will be recorded as what? As stock that has been lost. So if your balance as per the trial balance is lower than when the balance as per your physical stock count is higher than the balance as per your trial balance, that is when we say you have trading stock surplus. So what do you do with this trading stock surplus? You record it as other incomes, because it's an estimate where we say we are increasing an asset. Remember, if you increase an asset, you increase it using an income, but if you decrease an asset, you use an expense. So we are increasing this particular balance, saying that as per our trial balances, we are now making corrections, we are now making necessary adjustments so that our balance as per trial balance is equals to our balance as per physical stock count. Now, let us look at trading stock deficit. Trading stock deficit, you are referring to an expense account. We are still talking about a continuous or perpetual inventory system. So, how do we determine trading stock deficit? If your balance as per physical stock count is lower than the balance as per your trial balance, so it's more of an overstatement that needs to be corrected by that particular balance to be reduced so that it equals to your physical stock count, which is lower than your balance as per trial balance. So in this case, you get what we call a trading stock deficit, meaning that, or in other words, we had 90,000 in our trial balance, but only to find when we are physically counting stock there, we found maybe from 90, we found maybe 80,000, or trading stock of a value of 80,000. That means that 10,000 rand is a trading stock deficit because an asset must be reduced so that we are having an accurate amount or an accurate balance. Remember, whenever we prepare this financial statement, one of the qualitative characteristics of this financial statement is that all the financial statements that are prepared must be reliable to the users of these financial statements. So, trading stock deficit is an expense account where your balance as per physical stock count is lower than the balance as per your trial balance.